Hello and welcome to the paid weekly recap for the week ending May 22nd, 2026. I'm Keith Harwood, CIO of YellowTunnel, and also pictured as Vlad Karpel, the CEO and founder of YellowTunnel, and the creator of the patent-pending artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. YellowTunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and or the team at YellowTunnel may have a financial interest in the securities presented and the trade ideas. I'd also like to urge everyone to read the characteristics, and risks of standardized options available at the highlighted link. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap for this past week. With regards to the 10-year yield, we had the spike up, concerns over inflation. High inflation numbers, concerns about Iran, elevated oil prices, etc., have put this spark of expectations that the Fed's going to end up raising rates as their next move. This did start to dissipate a bit by the end of the week as there was some hope for progress with Iran. And the expectation is that progress with Iran can halt the rally in oil prices and start to resume a more normal period. And that could also help readjust inflation back lower. The opposite of the chart basically occurred in the S&P 500. As 10-year yield was spiking, the market started to pull back, and then as it started to fall off, the S&P started to rally back. I will note that during that rally back, actually, the equal-weighted S&P 500 ETF, RSP, outperformed and broke out to a new high. S&P closed very close to the previous high made about a week and a half ago. Overall, this market needed a dip after being so overbought. It got the dip it needed. It turned it into a bull flag, and it looks ready to take off even further now that there is even higher expectation of optimism on a deal with Iran over the weekend. Tech made a new high, but not by much. Held back a little bit, got back to an overbought RSI, but it's not nearly as overbought and frothy as it had been late April, early May. Semiconductors still look bullish. Semiconductors have been the dominant performer during this market rally. All about the AI story and comfort in being in semiconductors, the supplier to the AI engines. While small caps continue to lag. Small caps looked like they were going to start taking some leadership in December and even into a little bit of January. However, as we got into the situation with Iran and interest rates started to rise, small caps started to underperform. To note, after bottoming at 240, the rally was back to 285, about a 20% rally from lows back to highs. When you compare that to tech, we went from 550 to 720, 170 points, over about 30%. So you can see that tech was outperforming the small caps. Right now, they continue to do so. And as interest rates start to fall off, they may start to get some greater money flow, some more interest in things like financials or healthcare. Right now, the focus again has been really on those semiconductors more than anything. Now, there have been drag ups in these other sectors, but not nearly to the extreme that we saw in semiconductors. And the VIX closed near 3-month lows on Friday. And I expect that it'll fall further on Tuesday morning. We should see a further fall because of that optimism on a deal with Iran. The fear should be falling from this market. Otherwise, the market's going up with fear, and that doesn't make a lot of sense. As the market goes up, fear should be coming off. The comfort of buying should be as a result of more confidence that the market can go to new highs and continue. As that VIX falls, options get cheaper. As options get cheaper, we've got greater candidacy for a lot of these names that are coming up on the AI signals. Options being cheaper, I can get more leverage. We continue to hold the Murphy oil position, but first we had CSX, which was added on Tuesday. So on Tuesday, it looked like the breakout was about to happen, and on Wednesday, it did happen, and then we got a little pullback. Nothing too concerning yet, but if this starts to fall back below 44, that would be a real problem. And at that point, we may see a large loss for the options, being that this is a low volatility stock. So the $46 calls were already cheap, dollar-wise. Now, they can appreciate significantly if the market rallies on a move to 48. There would be a significant appreciation in these calls. We'll see what the beginning of the week brings. And Murphy Oil. Oil prices looked like they were ready to continue up to the upside. We saw energy companies pull back while oil was only pulling back a little bit. And then oil over the weekend fell further. So I wouldn't be surprised to see energy companies fall off a little bit further to start this week. We'll see how this goes. Ultimately, this may just be a spot to take the loss in Murphy, move on, if we are getting a real deal with Iran and oil prices fall materially. So we'll focus on the idea of CSX. We'll monitor Murphy. We'll look for new ideas this week. Even if Murphy ends up being a loss, there will be greater confidence from the AI models getting rid of that uncertain fundamental input, and that creates greater opportunity in the future. Now, if the deal with Iran falls apart and Murphy oil spikes, that's an offset to that because that gives us a benefit in the short term to offset somewhat the less consistent opportunities that happen when we've got a lot of fundamentals driving the market that are changing consistently, going from there's a deal to no deal to maybe a deal to no deal to maybe a deal to no deal. And that's a problem for AI in general because we're following the flow and the flow is constantly changing. Looking for consistent flow makes it a lot easier to navigate. Overall, the live trading room continues to find opportunities. We're seeing a lot of good ideas from earnings. We're coming up on the end of earnings season, but there are still some earnings ideas out there. And so we'll continue to watch for that. Please do join us. You can ask us questions anytime during that live trading room. And if you can't join us for the live trading room, you can always email us. I'm Keith at yellowtunnel.com or Vlad is Vlad at yellowtunnel.com. Looking forward to an interesting shortened week, and we'll see what the opportunities bring. Thanks again, everyone.